Hi everyone, Don Singletary, and welcome to the channel. If you want to learn how to trade small using the 1/10 size Micro Eminis, and then once you get the hang of it, you can scale up to larger money. But today we're going to be talking about trading small and affordably. We're also got some tips on trying to avoid analysis paralysis. And the live trade today is one I think you'll really enjoy. That and more coming up next. I made a video last week where trade make $24.50, I think, and I got an email from someone who really disapproved. They wrote me and they said, "Hey Don, what the hell are you thinking? People don't want to learn how to make $24. I said, no, they don't. They want to know how to make a lot more than that. But learning is what we're talking about today and every day here on the channel, because we go through a lot of similar things. We traders, we have analysis paralysis, we have fear of blowing up our account, we have a little FOMO, the fear of missing out, because we see ads and everything about people making a lot of money hand over fist. Well, these micro contracts, the Micro E-mini futures, they do offer like 50-to-1 leverage, and that makes them very risky. And with that risk, this isn't for everybody, comes a chance to take a little bit of money and to make a larger sum off of that little bit of money. That's the appeal, that's the attraction of futures trading. But it is high risk and not for everybody. But I found a column the other day that a person I don't know had written a couple of short paragraphs, and I kind of swiped the paragraphs, and I'm going to read it to you in a moment because I think it says very quickly and in a nutshell the problems that all of us experience when we're learning how to trade. And here's how it goes. Now, I took this from it's slightly edited from Reddit. And it says, I've spent about a year studying markets, psychology, trading strategies, patterns, and I'm just getting destroyed in every trade. I'm getting very discouraged. I've gotten to the point where I've learned so much I just don't even know what I'm looking for anymore. I lost 500 last month, literally no big wins at all. A few times I got stopped out early or did not set a wide enough stop loss, or I just took the profits too quickly. The thought that keeps coming into my brain is I don't have confidence in anything anymore. I spent hundreds of hours and dollars trying to figure it out. I feel like I am so close sometimes. Other times I feel like I know less than I did a year ago. Maybe I'm just not executing. Maybe it's because I keep changing frames, indicators, and tick charts." And he goes on to say, "I journal my trades. I switch back to the demo after a losing streak. It seems so easy when you're practicing. Maybe I'm just impatient. My only goal at this point is to gain confidence in something I know will work over the long term. I'm not trying to get rich quick. I just want to stop this madness of jumping around." I thought this guy summed up marvelously the experience that almost every single trader goes through. You get brain freeze, paralysis analysis from skipping around, changing things, starting over, practicing, real money, back to practice, try another system. It goes round and round and round, and let me tell you, it's never ending. And what we try to do here on the channel is to find some consistent ways that are affordable where you can learn to day trade these Micro E-mini futures. Live trade will be coming up in just a moment, but today's video we're talking about trading small. Why would you want to do that? Why would you want to just trade to make a little bit of money? Well, I can think of many, many good reasons for you to consider. Of course, you're going to make up your own mind. That's how it should be, because it's your money and I don't pay your losses, so you don't have to listen to me. And that's kind of my attitude when I get a lot of advice from different people telling me they found the holy grail of formulas and they're going to be filthy rich and stuff like that. First reason to trade small when you're beginning is you don't blow up your account. If you have a small account in the first place and you get a little gunslinger in you, you can lose your balance very, very quickly, because this is highly leveraged trading. At leverage of 50-to-1, the losses and the profits can mount up really fast. And you got to keep this affordable when you're learning. That's the most important thing. They have a saying at the poker table, and that is, scared money never wins. And it's true. If you're constantly afraid that you're going to put yourself out of business with the next trade, it's almost impossible to learn. That's a great reason for trading small right there. Second thing is it builds up your confidence. Now, you might think I'm not in my right mind to tell you that sometimes you're in the middle of a trade, you get lost and you happen to be $15 or $20 up and you have no idea what to do next. Rather than give it back, just take the money and then when the clouds clear, when the fog clears, you can study what went wrong and what you might do next time to prevent that. It just makes sense. And I hope if you get lost in that trade that you can save more than just $10 or $15. If you get $50, $60, $70, $80 ahead on a trade and you get lost, you don't panic. You don't say, oh boy, I'm glad I have a stop loss because I can only lose $30 on this trade. And then you sit there and you watch your unrealized profits plus the money in your stop loss, and you wind up having a losing trade when you would have been better off just hitting the button, get the heck out of that trade, take the money, say thank you, move on, learn some more with another trade, but don't give the money back. The next one on the list is building up your confidence. You know, when you have a trade and you make a mistake and you let the trade go bad and then you resort to hope as a strategy and you keep losing more and more, and finally you realize I'm going to take a whipping on this one, and you exit with a much larger loss than you would like to have, that destroys your confidence. It does. It really. Now, I think preserving your confidence, protecting your own self-confidence is just as important as protecting the balance on your account. And in fact, you could even argue they're the same thing. But when you've been beaten up pretty bad in a trade, you might want to take a breather, go run a mile, eat some broccoli, take a shower, whatever it takes to regroup and come back and go back with a renewed confidence when you get back to trade again. But guard your confidence. Don't do things that are going to destroy your confidence. Better to break even or lose a little bit on a trade, and then with the genius of hindsight, you can beat yourself up again a few minutes later when you see exactly what you should have done. That's what the genius of hindsight zone does to your head, and you really need to be very forward, very adept at protecting your own confidence when you trade. Whenever you get to a point where you realize you're really not comfortable doing the mechanics of the trade, and by that I mean reading the charts, the screen, the buy, putting in sell stops, stop market orders, all those things in your software when you learn to trade. It's kind of like building up frequent flyer miles, I think. Sometimes you just need to trade to get some experience because that experience will make you more comfortable. And a byproduct of trading is that you get more comfortable. The only way to get more comfortable driving a car is to drive a car. You can't read about it some more. Well, I think I made my point on that. But you really need to allow yourself time to get comfortable. You'll find your decision-making process will get smoother the more confidence you have and the more comfortable you get doing the mechanics of trading, especially if it's new for you. One of the most important skills you will learn in trading is what I call stop-loss competency. That means being able to use stop-loss trades like the stop market. You recall a stop market order has a trigger price, and then once the trigger price is traded, it becomes a market order, and it either gets you in or out of a trade pretty instantly. And I like to use those better than the limit orders, because if you don't hit the stop limit and then you get the limit price, then you're not in or out of the trade like you want to be. And it's very rarely that one tick one way or the other is going to make very much difference in your trade. So I almost never use the stop limit, though there are places for them. But I like the stop market order as a good stop loss competency. Now, so what does that mean? Learn this free trading. I call it a free trade. When I can lock in some profit, that means, number one, I cannot lose any money on this trade. And you would not believe, well, I think you would, how that relieves a lot of the stress of trading is by increasing your stop loss competency, getting that in there. Now, of course, it's always a balance. Am I getting it too close? Am I far enough away to let this trade make me some more money? And you get better at that over time. And also, another thing you get better with over time, and beginners maybe don't realize this yet, but When you're trading your first few trades and you've got 40 or 50 or $60 at risk, later on, after you've become more of a veteran trader with a lot of experience, the more you deal with higher and higher and higher numbers, the more you get used to them. In other words, if you're trading to make $20 to $100, and when you step up one day, when you scale up by trading multiple micro E-minis or the E-mini contracts themselves, which are 10 times larger, you will become competent at thinking in larger terms of money. But you do that gradually through experience. There's no magic phrase you can chant to yourself and you get comfortable with managing higher amounts of money. But it comes quite naturally with your experience. If you would like to see more videos like the one you're watching now, please hit the like button. That helps me make the videos that you want to see. And today's trade of the week is certainly going to be in the spirit of the video today, trading small. I'm going to buy 2 of the DJIA Micro E-minis. Now they trade 50 cents a point, and 2 of them, I'm buying 2 of them. It's going to be $1 1 point. 9:30 till 10:30, the yellow highlighted area, the market went nowhere, and then just after 10 o'clock it started making its forward move. And I did not get into this trade until later in the day at 11:16. Now remember, I bought 2 contracts at 31,664. This is 5 minutes into the trade now. I put in an initial stop at 31,640, 20 points below, and I got to move it up in the first 5 minutes to 31,660. Now remember, I went long at 31,664. My stop at 31,660. That's 4 points. So the worst thing can happen on this trade now is I'm going to lose $4. And the market's up at 31,691 now, so I use my trusty Tastyworks left mouse button, the click and drag action that I put over the stop market order. You can see I'm holding down that left mouse button and then put it back at 31,664. So I'm worst case scenario is I've even money on this trade. My stop and my entry price are the same, 31,664, and that's what I would call competent stop loss management. Now I'm pulled back on the screen here, and the current price is 31,713. I'm up $49 in the trade after 9 minutes here, which is pretty good pay for 10 minutes, I guess, in some circles. I'm using the left mouse button click and drag thing again in my Tastyworks software here. You hold the left mouse button down once you get it over the stop, then you drag it up and down, and when you lift your finger off the left mouse button, it enters a new price for the stop order. And there I just moved it up and have lifted my finger almost right here. I think it's going to land on 31,689. 31,689 it is. We're $44 up in the trade. It's been 10 minutes since we instituted the trade. I did take a look at the MACD at that chart a moment ago, and I see we've gone up for 16 consecutive candlesticks here. That's a trend, and that works out to about 80 minutes up. And trends don't last forever, even if they're strong like this one has been. And the market was up at 31,718. It's back down to 31,692. And there we go. We're stopped out of this trade. And it was a good one. It was pretty straightforward, really. If I'm critiquing myself on this trade, I would say I should have held. Now, with the genius of hindsight, I should have moved my stop back a little bit further and let this thing ride, and I would have made probably a lot more money. But I also am kind of glad I did it the way I did, because if you're a beginning trader, somebody needs to say, sometimes it's okay. Just take the money. You don't have to hold on for the perfect thing. Constantly second guess yourself. These trades, there's so many things in this type trading that we have no control over, none at all. So that control is an illusion. It's like the perfect formula for your trading. It doesn't exist. It's like that carrot, I like to say, that is always in sight but always unreachable. You just can't do it. Trade duration, 13 minutes, made 25 bucks. I could have made as much as 49 on that, and I wish I'd captured a little more of it, but I don't know really what I could have done much differently. The drawdown on the trade, at least this part was fun, was none. So it was not a very stressful trade at all. And remember, the stop-loss competency, get that stop-loss in there behind, and that takes the pressure off on these trades, and it's a lot easier to think. I know when you're a beginner, you have a lot going on at one time, and it will pass. You will get through it. Be sure and check out the link below for my book on day trading the Micro E-minis. It has a great chapter in psychology on there, psychology of trading, I mean. And be sure and check out the Tastyworks broker link in the text below this video also. I'm Don Singletary. Thanks for being along today. I hope every day is a payday for you. And thank you.